Good morning, everyone. Welcome to the webinar on Maple's cash management pool. We'll just give everyone a couple of minutes to roll in, and then we'll get started. One more minute, and we'll kick this off. Good morning, Cosmo. Brilliant. All right. Well, I think we can begin to get rolling. I'm seeing a few GMs popping up in the chat. Welcome, everyone. So kicking this off, this is the official launch event for Maple's cash management product. We're very excited to launch this new product to market at the perfect time, given the interest rate environment, and to continue to expand on the range of products available to lenders, borrowers, and credit professionals as part of Maple's vision to build a debt capital market on chain. So I'm Sid, I'm the co-founder and CEO of Maple Finance. And today I'm joined by Quinn, our head of capital markets and growth at Maple, and Paul Yablin, the chief investment officer of Room 40 Capital, whose SPV will be the sole borrower of this pool. We're very happy that you're able to join us today, and we'll get to introductions in a moment. But first, just to give you a quick overview of today's agenda, let's move on to the next slide. So first up, we're going to talk a little bit more about the cash management product, who it's for, what problem it solves for them, and then it's going to be turned over to Quinn, who will reveal the third-party partners who support the pool operations, as well as the flow of funds, and give you all a tour of the pool page. Then Paul from Room 40 is going to share his trading experience and their responsibilities with their SPV being the sole borrower for the pool. We've also gathered some questions from Twitter, and we'll cover those at the end, and then open the floor to some live questions. So if you do have a question, feel free to put that in the questions tab at the bottom right, or in the chat. We'll try and monitor both. So with that, let's get started. All right. So as a bit of an overview of the pool today, we've specifically designed this as an on-chain cash management solution, with the pool's objective being to provide simple and fast access to yield sourced from US Treasury bills, as well as government-backed instruments. And this is intended to meet the liquidity, the risk, and the accounting requirements of customers. There's no reason that idle cash shouldn't be earning a conservative yield in today's interest rate environment. However, accessing conservative off-chain options like direct purchase of T-bills through banks, brokerages, has become increasingly difficult for crypto-affiliated parties in today's environment. On-chain options are yet to provide the kind of peace of mind that you would find necessary to attract hard-earned treasury funds, and counterparty risk is either too high, assets are too illiquid, or rates are too low at between 1% and 2% for the level of smart contract risk that's being taken. So with Room 40, we designed this cash management pool as a solution. Now, Quinn, do you want to take us through the key features of the pool?
Yeah. Thanks a lot, Sid. So just a couple high-level overview items. The pool is open to non-US accredited investors and entities. So we've launched it under Reg S, and in the future we're going to look to open it up, to other, folks in other jurisdictions as well. But starting here, and it's important to note anybody, with an entity, so that includes many DAOs that we're working with as well, are eligible, and so we're happy to support the governance processes for your respective community or governance and DAO as you go through that. As Sid mentioned, the yield sourced from the US Treasury bills and reverse repo agreements. the pool's passing that 1-month US Treasury bill rate on to lenders, less the 50 basis points fees, which we can get into. It's important to note that the interest accrues immediately when you deposit. So lenders coming to the pool after they've been KYC onboarded and had their wallet address whitelisted are able to deposit the USDC, and in return they receive the Maple Cash LP token, which represents their pro rata share in the pool. And so one of the things we'll be looking to do over the next few months is increase the utility, composability, and interoperability of that LP token to be used throughout DeFi, integrating with a number of custodians in this ecosystem, and increase the utility. But it's important to note there's no lockup period, and your interest begins accruing basically block by block, starting when you deposit the USDC. Withdrawals are serviced on a next day basis when US banking hours are open. So daily liquidity, usually Monday through Friday, except for holidays. Another feature we really like about this offering is the ability for lenders to come in and monitor the pool on a 24/7 basis and see real-time performance. So we have an API integration connected to the brokerage and custody accounts where the underlying collateral is held. And so in the Maple web app, which we'll walk through a little bit later, you're able to see the portfolio of assets, the specific treasury bills themselves, the duration, the principal, and the interest rate associated that are held with the regulated broker. Interest statements can be downloaded at any time and used for accounting and record keeping purposes through the Maple web app, similar to how our other pools operate from an administrative and accounting purpose. We feel that we've brought in the best parties for this offering. So Maple's track record, we've done over $2 billion in loan origination since inception. Our smart contracts, since we rolled out Maple 2.0, have been audited by a number of the leading assurance firms in the space: Spearbit, 3 Sigma, Trail of Bits, and we're recently rewarded the 92% DeFi safety score. So we feel coming to market with this product, people can trust, people can rely on the smart contract and tech infrastructure that we built here at Maple. And then just in steps of light of recent market events, we feel very strongly about the technicalities, the logistics, and operations behind this cash management pool. So lenders, treasuries, people looking to deploy in a low risk, high duration, short duration way can get peace of mind. And so assets that are held in these custody accounts have account control agreements. As Sid mentioned, it's a special purpose SPV that's bankruptcy remote, managed by Room 40, and all the treasury custody or collateral is custodied by a regulated prime broker. And so through this account control, you have recourse to that underlying collateral, which is enforced by the security agent, in this case, the Maple Foundation. So getting a little deeper here into who the pool is designed for. So it's actually quite a broad offering, and something we're excited about because it suits a lot of different lender types and folks with different risk appetites and use cases. So once the party's onboarded, as I mentioned, non-US accredited investors or entities, going through our AML checks with TRM and then our onboarding process, there's a number of folks we've really found this to be a fit for, and that includes corporate treasuries and startups. So despite the kind of slowdown in the broader crypto markets, we're seeing consistent fundraising and some real nice raises and rounds getting done. And so there still is that momentum in the space and capital coming in. And so we've been working with a number of startups who've raised $10-15 million rounds over the past couple months, who are looking to find a place to deploy that, earn an extra 4 to 5% on that capital instead of sitting idle, with inflation where it's at. And so that extends runway. We also have, many of those have to keep a certain amount of their treasury within USDC itself. And so either fiat USDC, they can deploy through here. They have a lot of working capital, OpEx needs, and payroll that they might pay through contractors or other. And so the daily liquidity here provides a real added benefit that they can get that fund on short notice. For crypto funds, so there's both VCs, liquid tokens, that some of the market makers that we're working with on this as well. Whether that's sitting on dry powder in between deployments, idle cash from capital calls, or on the liquid side, just looking to wait out to look for more opportunistic price points and purchases. We'll have a number of these funds also depositing into the Maple Cash Management Pool on day one, and so many of these folks also denominate solely in digital assets, and with the recent banking issues, that fiat to USDC might take a little longer, and this is really helpful in keeping those funds on chain and being able to park the dry powder to earn yield, block by block. DAOs, similar to corporate treasuries, it's important for them to diversify assets, extend runway, and a lot of talk and generating value for the communities they represent. And so we'll be working with a number of these protocols through their governance processes, the ones with entities that can KYC and onboard, to be depositing this pool. And then you also have the high net worth individual bucket, which I think transparency is really key here, as we've seen over the last 6 to 12 months. That's been a sore spot in the industry, and I think there's a lot of things to capitalize and learn from moving forward. And accessing the treasuries directly via the Maple Cash Management Pool, high net worth individuals can see everything that's being done on chain, maintain their funds in stable coins, and capitalize on the TradFi rates, while visibly seeing where the collateral is put to work and what's underpinning the pool. So overall, we're really excited about this. We think it's sort of a core product offering coming out of 2022. There's been a big risk off in the space, and so we think bringing this to market provides people a way to dip their toes back in, kind of use it as that core allocation for their yield strategies, and then as appetite and markets improve over time, look to move out to other strategies that might be higher yielding or longer duration. So passing it over to Paul from Room 40 to give a little intro and talk about their role.
Thanks, Quinn. I'm Paul Yablon. I run Room 40 Capital. My background is pretty long. I've spent 36 years working on Wall Street. The last 30 years were at two pretty prominent firms, RBS Greenwich Capital for 15 years, and then for the last 15 years, I ran money at Moore Capital, which is Louis Bacon's hedge fund. I've professionally traded every asset in the world: foreign exchange, fixed income, equities, commodities, and now I'm trading crypto for a living. I started trading US Treasuries in 1986 when I was just out of school at Brown Brothers Harriman. And I ran the US Treasury desk at RBS Greenwich Capital, which was the third largest primary dealer in the world. I was responsible for everything from government repo and T-bills to trading longer duration treasuries and interest rate swaps. On a daily basis, we traded and cleared billions of dollars worth of treasuries. When I started in the business in 1986, trade tickets were written on carbon paper with 3 different copies created, and I would put them in pneumatic tubes and send them to different floors to have the trades entered into the system and processed and cleared. As time went on, things became more automated. For instance, like treasury auctions, when I started, we used to send a runner to wait outside of the Fed on Liberty Street at a payphone, and we would call and they would put bids in for the treasury auctions. By 1990, auction bids were electronic, and the Treasury changed to a Dutch auction process. Interestingly, 32 years later, that same system is still in use. There's been no further innovation in how treasuries are traded and how auctions are conducted with the US Treasury. It gives you an idea of how outmoded some of these systems are, and it really does point to why I was very interested in getting into blockchain and crypto, because it was quite obvious to me that the rails from the 20th century, which all of finance was sort of built on, is really inappropriate and ill-suited for the internet age. So about 2 years ago, I decided to start a crypto platform, Room 40. We have basically two core products here. We have an early stage venture capital fund, and we have a liquid hedge fund. I manage a liquid hedge fund. Essentially, what we bring to the space is 36 years of investment experience, and along with that, institutional grade portfolio management capability, and what we've also built is a best-in-class operational system and infrastructure, and that's really what we bring to the Maple pool, and the integration with Maple is really our operational infrastructure. We have what we consider to be a best-in-class operational system for trading both crypto and traditional financial markets, and using traditional financial rails, Fed wire systems, prime brokers for trading things like treasuries and investing fiat cash, and we combine that with crypto infrastructure, in which we use very secure MPC wallet technology, and so we're able to sort of, as an organization, seamlessly bridge the fiat system with the crypto system, and our vision is that at some point in the future those two systems will be fully integrated and merged, but for right now, clearly they are separate and distinct, and so it's very exciting for us to be part of the process of trying to bring some of the safe and secure money market opportunities in fiat to people who own crypto stablecoins. I guess at this point, maybe I should talk just a little bit more about how we conduct the process of integration with Maple. So when a USDC holder wants to invest in this Maple pool, obviously they go to the Maple protocol and deposit their USDC, and they get a token. Those USDC deposits are pooled. We have established a special purpose vehicle, which is under the management of Room 40, but is a single purpose vehicle. The only purpose is to borrow USDC from the Maple pool and the Maple pool delegate. We borrow that USDC at a fixed rate. The rate is based on the 30-day T-bill rate. We then take that USDC, we put it into our secure MPC wallet. We then, either through using our accounts at Circle or our accounts at Coinbase, will convert that USDC into fiat. We then, using the Fed wire system, wire those dollars to our prime broker. And at the prime broker, we invest in short-term treasuries, which will either be T-bills, very short coupons that were issued as longer maturities that are soon to mature, or government-backed repo. That's how we generate the yield, which is accrues. And then when token holders submit a redemption request, we then sell some of those treasuries and or redeem a repo. We then take the fiat currency, we wire it back to our accounts where we're able to convert back into USDC, send the USDC to our wallet, and repay the loan, such that the USDC goes back into the pool, and then Maple is able to honor a redemption request. It is our final responsibility to repay all loans. We are and we're quite confident that owning treasuries as collateral and as Quinn mentioned, we think this is a very secure money market investment. The one other thing I'll just say is that as an organization, we are super concerned with security, safekeeping of assets. We do very vigorous counterparty due diligence, and we're proud to be able to say that during last year's counterparty debacle in crypto, we had no exposures, suffered no losses as a result of the crypto problems. So we are we think bringing again a lot of experience and operational integrity to this point of integration and also the point of investment in order to generate money market yields in fiat. I guess I'll leave it there, and happy to answer questions in the future.
I think
Quinn, we can pass it back to you. Do you want to give us a bit of a tour of what we're looking at here with the pool page here?
Yeah, let's do it. So up on the slide, you'll see a number of screenshots. These are taken basically directly from the Maple web app. If you go to maple.finance and log into the Ethereum web application. So first on the left side, we have the strategy information covering the pool. You can actually download one of those orange boxes there. It's a bit small, but download the strategy deck and kind of run through the details on your own. These pictures are illustrative purposes only, but on the bottom right, you can see what it's going to look like when the T-bills are in the account and feeding through the API to see all the holdings on an individual basis. So as with all our pools, we prioritize transparency, and we think whether it's the duration ladder, maturity profile, distribution of interest, and the holdings, it's important that that lenders are able to look through and see everything that's within the pool. The pool page itself, so the real-time visibility of the outstanding loans. It's once lenders are onboarded, the top right, you'll just go through a couple type forms and some information requests. So hopefully it doesn't take too long, 10 to 15 minutes to complete, and then uploading some of the documents that are required for us to verify your KYC and AML attestations. From there, you're able to see room 40 there, all the loans and amounts outstanding when they're due. And as Paul mentioned, we expect, given its daily liquidity, facilitating consistent withdrawals, redemptions, always kind of reinvesting and repurchasing as needed to make sure the pool is fully utilized. And then I mentioned earlier, but the monthly or kind of any period you'd like to download, interest statements are available. So this is helpful for a lot of the entities and institutions we're working with who need interest statements for accounting purposes. And you can see all that right within the web app itself. So I think that covers that. I know we went a little bit long, but we still have 5 minutes for Q&A. So I'll kick it over to you, Sid, to lead that.
Yeah, sounds good.
I'll start working through some of the questions that we've got in the questions tab, and I think there are also a couple posted in the chat. So I'll circle back to those afterwards. All right. So how has the cash management pool been received among Maple and Room 40's respective networks? So I think positive so far. Since we announced the launch about a week and a half ago. We have at this stage, I think, about 56 people going through onboarding and sign up via our KYC process. So I'd say reception's been pretty good so far. And remember, that is all offshore participants. So as Quinn said, in future we do want to broaden this offering. Second question, I'll try and work through these at a bit of a speedy pace. Sam C, if I'm a DAO and I want to park my idle treasury to earn T-bill yield, how do I make sure my anonymity is preserved? So for the KYC process, a DAO would submit their articles of incorporation or their foundation establishment docs, and certify the source of funds for the DAO. So we're trying to conduct a fairly standard KYB process for DAOs. We do realize it's difficult for them to access traditional banking facilities. So we've tried to come up with a way that that both meets AML obligations, but is workable for DAOs, particularly DAOs that have a foundation entity. Next one from Adam. What is your strategy for managing your T-bill exposure through the debt ceiling debate? And are you actively avoiding specific QSIPs? I think for this one, perhaps I'll pass over to Paul. He's the expert on that side of things.
Yeah, so look, there's no question that the debt limit poses some issues for maturing treasuries. We will be very careful to, we're following this very carefully. We're doing our own analysis as to what the treasury's cash position will be and when are they going to run out of money. With all that said, we're going to be very careful to make sure that we do not have money trapped by the possibility that there's a delay in repayment of any bills. So we'll utilize repo rates and also invest, kind of a barbell structure where we'll make sure we're beyond the sort of cash crunch dates. So yes, it's something we're very focused on. And this is not my first rodeo with sort of debt limits. This has been ongoing for the last 30 years. It's so we've been here before. We know how to manage it.
Yeah, for sure. Okay, so continuing through the questions, they are continuing to pop in. So from Torben, we've got, what is the minimum ticket? So minimum ticket is 100K USDC. We are prioritizing parties who can do $1 million for the start, just so that we can work through that backlog and just kind of prioritize appropriately. But it is 100K minimum, and prioritization for parties who can do $1 million or more. Next question, how short are these short-term treasuries? So we're shooting for a weighted average maturity of 30 days so that we minimize any mark-to-market risk. You would have seen, the mark-to-market losses incurred by SVB were due to purchasing extremely long duration treasury bonds. And so here we're managing that through a covenant and a restriction on not going above 30 days weighted average maturity. How much are they yielding? So as at today, it's 4.3. And so
that's not right, Sid. Excuse me.
No.
30-day treasuries are yielding over 5% now. And that's a function of the fact that that's a function of two things. One is there's an expectation the Fed will hike today, which will tend to bias up the rates a little bit. But importantly, it's because of Yellen's comments the other night. And there's now an expectation that and a risk premium that's been put into the 1 month bill. Previously, people were hiding in 1 month bills, and now 1 month bills appear to be more vulnerable to the possibility of getting trapped by a technical debt limit constraint. So in any case, assume now better than 5%.
Okay, awesome. And the net fees there are going to be capped 50 basis points. So assuming it's 5%, the lenders in there would be earning 4.5% net of fees. Transaction costs from Cosmo. So the borrower would bear gas, wire fees, prime broker commissions. and that is all part of that bundled 50 basis points total cost there.
And custody fees and MPC wallet technology fees and all the rest.
Yeah.
Sorry for interrupting you, but I will say one other thing, which is that in a typical hedge fund, you pay sort of 2 and 20, and the 2 is really to pay a lot of operational expenses. So in some sense, when I think about these fees, I think about that you're getting institutional hedge fund operational risk management for 50 basis points. It's not really a bad deal.
Yeah, absolutely. Working through the other questions. So who will be the on and off ramp provider? That would be Circle or Coinbase Prime, used for the on and off ramp. And then I believe we had another question from Nicholas. How much of this is on chain using smart contracts? So everything from your deposit into the pool, where you get back the token, and you track the interest that you earn, is managed through smart contracts. The loan to Room 40 and the terms of that loan are also managed through smart contracts. And then it's once Room 40's SPV draws down the loan and then off ramps it, then that starts to happen off chain. So T-bills are of course purchased off chain, and then the interest payments are made back on chain again. So it's just the purchase and custody of T-bills that happens off chain. It's the deposit, the origination of the loan, and all of the repayments that occur on chain. Question from Michael: what has the relative interest been in the pool across the 4 buckets you listed earlier in the slides? So we're seeing probably the heaviest interest from corporate treasuries and high net worths at the moment. And we're starting to see interest trickle in from DAOs, which of course have to go through a bit of a lengthier process. And then also from some crypto funds who are looking to park idle capital. So I'd say corporate treasuries, high net worths, then followed by crypto funds and DAOs. All right, I think we are starting to come up on time. So I'll try and circle through maybe 1 or 2 more questions. I think from Tobias, we have: what are the main risk factors for depositors and how do you mitigate them? So a change in interest rate. So interest rate risk is one of the key risks. And how that's being managed is by limiting the weighted average duration of the pool, so that it's short dated T-bills, so that if there is a sudden abrupt change in T-bill yields, there is a minimal mark-to-market impact on the book there. So I think that's one of the key ones that's being managed. The rest are operational risks. So that's managed through things like the account control deed. So if there's a default on the loan, the Maple Foundation can step in, repossess the T-bills and liquidate them to repay the loan. So it's, with a product like this, it is primarily operational risks that need to be managed for.
I think it's important to just clarify that the obligation to repay the loan and repay the interest, which is borne by the Room 40 SPV, means that the underlying lender does not assume any interest rate risk, right? They're going to get a yield, which can fluctuate with the yield on treasuries, but they don't have principal risk. So it's not like they own a bond that's going to go down in price when yields go up. They do not, that risk is not borne and is managed by the SPV.
Yeah, correct. The Room 40 SPV has a fixed obligation to repay both the loan principal and the interest there. I'll do one further question from Dayjenks. So could we see any principal loss due to bond value fluctuation? So as Paul mentioned, that risk is borne by the SPV, but we're mitigating that through the use of short duration T-bills, so maximum weighted average duration 1 month. And so the total mark-to-market impact of like a 1% move in bond prices or bond yields would only be 7 to 8 basis points on that. So that's protected through some capitalization of the SPV. All right. we've gone slightly over, so I think we'll start to wind up there. So thank you all for your questions. Thanks everyone for attending. If you'd like to get onboarded into the pool, please do submit the lender onboarding form, which is at the link that Charlotte will post in the chat. Thanks everyone for attending. Have a great day.